a little 3-lot trade, guys. Literally a 3-lot trade. We'd obviously a successful auction here. Okay, so there we go. There's the successful auction running back in through the highs. And then it sells off. Break structure lows. Break structure lows. Yeah? So on the basis that we've now broken structure lows, the idea is if we do not break this high, I'm a seller, correct? If we don't break the high, I'm a seller. So that's the job now, is to try and figure that out. So it's not that difficult to figure. We got to a high price here. The price started to sell down. I brought from below here, I brought up my sell stop order into the price area here. I checked the slippiness and it was sliding down into the bottom edge. And I sold at the bottom edge. 1 tick above or 2 ticks above the bottom edge, I sold. And I was able to take a quick, well, you can see for yourself at that stage, $660 sell side profits on a 3-lot from the cash, basically the cash open, without having to try and fade the top edge, because everybody can see that there was absolutely no interest in the top edge. The book was very bearish, but where are you selling it? Are you selling it here when it first started? Did you sell it here? 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 Or did you sell it as it started to sell back off? Well, it's still a bullish structure at that stage. Still a bullish structure. So you still have that problem child brewing in the background, aren't you? You still got that problem child brewing. And, you know, as I said, I like the idea of the sell trade. So just using the structural elements to try and get in for a bit of business, to me, seemed to be the right play for this whole phase. And obviously the idea is, of course, to try and get the squeezes on and to try and go with the flow of the orders in line with obviously any slippiness that we start to see developing. And if it breaks, you're in it. If it breaks, you're in it, right? I've just done another one right there. I'll take another screenshot and I'll show you what the next one I did there. So the value is still not really showing for me as a buy trade at the moment. So I'm very, very keen to try and hold on to the idea of being short selling this. So I've just taken another short. And you can see that that short's just done $1,000, which is nice. I'll take another screenshot so it shows the 1,000. So there's the next short there. You can see it for yourself. It's now done a very, very big profit on that bit of business. Again, book's still very bearish at the moment. So that's obviously one of my concerns, is that the delta was obviously slippy to the upside. Started to top out. But I'm not using the delta for this particular trade. I'm using simply the structure. So what happened? How did I sell it at this price? How did I come to sell it at this price? Well, obviously I got a buyer coming in here. I seen it jamming at the top edge here. I started to see buyers getting jammed in here. I started to see the slippiness eventually showing up, and I decided to jump as soon as I could into the cross. This time I paid 8s. The last time I paid 9s. This time I paid 8s. And sure enough, selling a bottom edge, another $1,000. I mean, it's just the way you sell lows, right? It's the way you sell the lows. It's the way you sell these storylines as they evolve into these phases. It's nothing difficult about this. As I said, I'm not seeing anything particularly encouraging as far as trade is at the moment to get into this as a buy opportunity just yet. So I'm quite happy to be the short seller into those low edges. And that's exactly what we've done on 2 occasions. Neither of these 2 trades are short selling into the top edge. A lot of people say, but you never sell at low prices. It's really easy to sell at low prices. Far, far easier to sell at low prices than sell at high prices, I can assure you. Someday you might try it sometime and see for yourself. But you've still got to make sure you put the structure into your favor. The idea of wait for the auction to evolve, wait for the auction to show you what you're doing, wait for the trap to set up. And that's exactly what happened on both occasions. This setup here is the same as this setup here, isn't it? It's the same setup. Wait for the trap, wait for the failed auction, join in with the selling as the flow turns back negative, and then see how far it rides. See how far it rides. It might just be a crashing market again, and you're in it. Yeah. So it's one of those elements that you just have to have confidence in. But when you start doing it, you'll start to recognize that you actually go into profit almost immediately in these types of trades. If you don't, you're probably in trouble. Yeah, that's the thing about those types of trades. If you're fading a top edge, you rarely ever go into profit in the early stages of your fade because you're having to fade and develop out a market narrative. The challenge you've got as a retail trader is how far do you give it? How much size do you build in early? How much size do you build in late? And so on and so on. But as a momentum trader, then of course, the first thing that should happen is I should immediately go into profit having sold it. If I don't, that's a clue that I might have it wrong. And if I get used to that process, I might be able to take the trade off almost immediately for a scratch at that point. Say, I never got my trade right. The momentum when I sold it went straight back against me. I'm out. Scratch. Nothing wrong with that, guys. Nothing wrong with that.